Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I am here with another video for you all. And this time I come with you for this video on landmark cars, a very interesting business that is into the high-end luxury brand cars. So we'll discuss about how the numbers have panned out and whether this company is to be looked at these prices that currently it is trading at. A very recent IPO. So we'll discuss about the business in details, and then I'll discuss about as to how the numbers are stacking up and what needs to be done being an investor in this stock. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about landmark cars, here's a small request that kindly support me on Patreon. Once you do that, help me grow the channel, help you also ask me questions and ink out answers in greater detail. Once you get that $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put out from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can get the WhatsApp yearly membership, or you can also be a member on YouTube by clicking on the join button, and you get all the benefits of Patreon there. So before I talk about the growth drivers for landmark cars, let me take you to the screener website and we'll discuss about what the company does and where everything lies at the moment and what is their business overall. So this is about landmark cars. The stock is around 560 rupees or so. So this was incorporated in 1998, and this is the leading premium automotive retail business people in India, with dealerships for Mercedes-Benz, Honda, Jeep, Volkswagen, and Renault. And the company also caters to the commercial vehicle retail business of Ashok Leyland. So that's the kind of business that Landmark Cars have at the moment. The company operates on two business models. So basically, sale of used vehicles or sale of refurbished vehicles that they do on online and offline platforms through their retail stores, etc. They have the market leadership, so they were the number one, you can say, dealer in India for Mercedes in terms of retail sales, number one dealer in India for Honda, and number one dealer for Jeep in terms of wholesale sales for FY22, and were the top contributor to Volkswagen's retail sales for the calendar year 2021. And also they were the third largest dealership in India for Renault in terms of wholesale sales contribution in the 2021 calendar year. So they have leadership in many aspects with top clients that they are having. Currently, they have outlets as we see here, 112 outlets currently that is working in 8 Indian cities, comprising 61 sales showrooms and outlets and 51 other sales services and you can say spare outlets as of September 2021. So let me have a look at, so their geographical spread is all across India, in Maharashtra, Uttar Pradesh, Gujarat, Haryana, Madhya Pradesh, Punjab, West Bengal, and the national capital region, which is Noida and Delhi, etc. So what are the, you can say, the revenue breakup for the company in terms of Mercedes Benz? They do 22% of the revenue in FY22 versus 33% that they did in FY21. So basically, the revenue has gone down from Mercedes-Benz point of view, so share is down. But in terms of share for Jeep, that has increased 24.5% from 14%. Volkswagen has also increased from 6.5% to 10%. And we have Renault, which is stable at around 11% share for their total revenue. And now they have mentioned that they are going to, you can say, scale up and expand into the EV business with the letter of intent with one of the EV companies, that they'll be solely manufacturing or exclusively manufacturing for them. So this is also something to look forward to. So this is basically the business of Landmark Cars. The stock is currently at 564, market cap of 2200 crores, so it's a small cap company. What I like about the company is that it is trading at only 0.75 times price to sales, so not extremely expensive on that basis, but at a PE of 33, whether it has value or not, with an ROE of 31% and ROCE of 19%, we have to look at that. So for that, let's come to the numbers part. So basically, what they did in December is what we have to see here. So in December quarter, what the company did was 876 crores of sales in December 22, and last year in December 21, since it's a very recent listing, so we have only 1 year data in here, that they have provided 837 crores. So the growth has not been that great. And that is exactly what I meant by whether at 33 times PE, whether the stock looks good or not. So only 37 crores, 36 crores. So that's about 4.5% sales growth year on year. And even if you see quarter on quarter from 850 crores, it has been a very minuscule growth of 2-3% quarter on quarter. In terms of profitability, again, 52 crores of operating profit in December versus 65 crores this time around. Uh, Reasonable, but not something to be really gaga about, or that they are doing exceedingly well or something. 25% growth in terms of operating profit. Margins have slightly improved year on year and remain stable quarter on quarter at 7%. And eventually, when you look at the profit figures, from 28 crores, the profit has came out to be 31 crores. I'm ignoring the net profit numbers because in December they paid a tax of 18% versus 32% last year in December. So basically only a 10% rise in profitability, 20%, not even 20%, 4 5% rise in sales. That is what the company is doing, and it is trading at a PE of 33. So yes, it could have a premium PE because of being in the premium segment and having such a market share, etc. But I don't think that it should be trading at a valuation that it is trading at currently. If you look at sales growth over the years, from 18, it was around 1600 crores, then went to 2800 crores. Magnificent performance in that regard. Margins remained at 3%. In 2020, it dipped, and in 21 it dipped further because of the pandemic, but now they are going to set to come out with better numbers. But if you look at the overall numbers pattern till March 22, they have had consistent operating profit growth from 51 crores to 82 crores. That's a 60% jump. And then to 114 crores in March 21 in a very difficult environment as well. So even there they did exceedingly well to have this 40-50% growth. And again a 50% growth to 176 crores operating profit. But if I see on an extrapolation basis, in March 23, I don't see that the numbers will be so good, because if you combine these three figures, then it comes out to be something around 177 crores or so. Even if in March they did somewhat similar number, then they would be doing, if they do say somewhere around 70 crores, so on 177, if I calculate, then they would be doing something like 247 crores or so, around about that. So if I say 70 crores, that's 247 crores uh, of you can say profits, versus 176 crores of profit that they did last time around. So that will be a jump of around 40%. So it's not 50-60% that they were doing earlier, but it will come down to again 40% growth. And if you look at year on year, December to December, the growth has been about 20-25%. So I think this is going to shrink even further. This 40% profit growth number that will come out with in 2023 may shrink further to 35 or 30%, because the sales figures are not looking that great. So that is my assessment of the results, that yes, they are growing decently well, but I feel that the margins are small, and at that you have a situation where sales growth has been not that great over the last 2 3 quarters, and in a high interest rate environment this doesn't augur well for such a company which is into the high end cars business or the luxury car business. If you look at the reserves picture or balance sheet, I look at only the reserves and borrowings. Reserves are around 250 crores and borrowings are around 625 crores. Now that is a concern. I don't know what the picture is for the September and December numbers. Once they are out, we will be able to understand that as well. But at the moment, it does look like that the borrowings are increasing pretty sharply. Uh, Debtor days has reduced, inventory days have reduced, but I don't know over the next or last 1 year how the performance has been, because this is March 22 numbers that we are looking at. In terms of shareholding, we have promoters at 55%. There are FII, DII holding in the picture, but there could be a scenario where you can say they might be selling in the current quarter and we'll only come to know about it once the quarter ends. So I don't know about that, but that could be a situation. So overall, the company is good, the business is pretty good, but the valuations, in my opinion, is slightly stretched. I would have liked to see the stock not to be at a PE of say 60, 65. It's I think exorbitantly priced at that. If you look at sorry, this is standalone, so let me look at consolidated numbers, and then we have a pretty decent picture. So it's trading at 33 times in terms of PE. I think 33 is stretched. I believe that the stock, with the kind of growth that it is happening, may come down to 25, 24, 25 times. So again, a good 20% downside is possible here. Uh, it could just rise because of the fact that the market may recover later on in March or April, and maybe exorbitantly priced. But what is the, you can say, the inherent value for the stock? I believe it is somewhere around 450, 460 rather than at 550, 560. So that's my point. Now, perhaps this could change with these growth drivers that I'm going to talk about now, as to why I believe that the stock is good. So, on a long term basis, the company is good. The company can do extremely well, but at the moment, we have a situation where the valuations might be stretched. But in terms of the growth drivers, expansion in higher income group, so what is happening is that high income group individuals, high net worth individuals who are having 1 crore or more than 1 crore or 5 crore net worth, they are increasing big time over the last 4 5 years. They have increased big time, and the same is happening here in India. So I think sales of Mercedes, and as is evident with one or two interviews of the CEO of Mercedes that we saw recently on television, they are picking up. So this is one growth driver that looks firmly in favor of landmark cars, and demand will increase and has been increasing over the years for such cars which was very minuscule say 20 25 years back, but currently it has gone up sharply. Service and maintenance is a decent part of the high-end cars, and service and maintenance business is also pretty decent for landmark cars, so having a decent percentage of the total revenue. And I believe this will continue to be the focus of the company, and hopefully going forward this is where they're going to focus, and the margins would be better in here because of the high end cars that they are working with. Established dealer network and showrooms that they have with geographical presence across India is also very big positive, and it is a dominant player in this space. They have leadership with Mercedes, leadership with Honda. They are second or third placed with Volkswagen, etc. So they are doing well in Jeep also. They are one of the top with as a clientele. So overall, the growth drivers are in there. Now, whether they'll eke out better margins or not, this is what we're going to discuss in the next slide. So, what are the points of concerns that did not? I mean, initially I thought that this is one of the best IPOs that have come in, and I wanted to review this. But when you go deep into the numbers, as I have done here, and analyzed as to how the sales and profit growth has been, there is slowdown in growth. So the growth that was 50-60% earlier before the pandemic has gone has slowed down appreciably to around 25%, whereas the stock is trading at a PE of 33, 34. So there lies a point of concern, because we have seen that how one bad quarter or one subdued number in a quarter may take the stock down 20-30%. This is what I'm concerned about. Valuations expensive, as I mentioned. With all this, economic slowdown is another point of concern, that what if the growth in India stagnates to around 6%, 5-6% only, and not go to that 8-10% levels over the next 3-4-5 years that everybody is talking about. Then the biggest hit would be in the higher discretionary income bracket. People will buy necessary stuff because they have to buy, but higher end products will get hit, and this is where something like landmark cars may be hit big time. So that is why this is not something to be bought from a 8, 10, 15 year perspective, because there could be a lot of troughs and falls. There could be highs and lows for the company as well as for the stock. There's decent level of debt that I have talked about, and normally these kind of businesses do have debt, but not at the level that Landmark currently has. I don't know whether they have reduced it or not by now, or increased it by now, but prima facie, when we look at it, there is a decent debt. Margin compression with volatile raw material costs is always a threat to this kind of a business. If chip shortages take place, or if metal prices go up big time and commodity prices go up, I think margins will be hit, because they won't be able to, being a uh, si- see, it is a similar kind of auto ancillaries as other companies are. So they are not the producers of Mercedes altogether or anything. They are facilitator to the, you can say, the refurbished cars, or used cars, etc., of Mercedes and high-end products. So they will be hit in slowdown. In fact, autos are hit the worst in slowdown. We have seen since 2017. 2017 was a good year for the auto industry, and since then, over the last 5 years, we have seen nothing happening with the stocks of auto or the industry altogether. So that is a huge, you can say, concern for investing into such a company. So I would say the best approach would be for you to wait. Probably I'll wait. If I had money, I would wait for massive declines and value to emerge in the stock. If I say that the company would continue to grow at 25% CAGR and not 40%, say they'll grow at 30% altogether, then I'd be ready to buy the stock at around 24-25 P rather than at a P of 30. Yes, at a 30% CAGR growth, a company could have or command a P of 50-60 even. But in this case, with higher debt and volatile business and cyclical kind of a business, I think the PE will go down. So I would be more comfortable buying 15%, at least 10 to 15% lower than the current price, preferably 20% lower than the current price. I think growth and valuation should match. Probably under 30 times is where one can look at. So at 28 times earnings, 27 times earnings, when it comes to, that's where one can definitely look at buying into it or start buying into it. And probably what you can do is keep adding down the quarters. See, this stock will not give you consistent returns. So there are two aspects of treating this business. If you buy into it, that in complete euphoria you sell and then buy on massive declines again, or what you do is you buy in small chunks, few shares here and there whenever the stock falls big time, and keep on doing that over the next 4, 5, 6, 7 years, and hold over 10, 15 years to make big amount, because overall the business is good, but numbers need to become stronger or stock needs to correct. Either one or two things will happen. So whether they'll continue to have 40% CAGR growth, that is what we need to now see. So this was my video on landmark cars. Please like and subscribe my channel and hit the bell icon so you can get my video straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.